Hey guys, welcome to my channel Logical Investing. Today in this video, I'll be telling you guys why it is so important to do your own research and due diligence on stocks that you want to invest in. Learning more about a company can be the difference between earning money and losing money. But first, I would like to give an update on last week's video about SOS. Last week, I predicted that the stock would hit $10 a share when it was only $7 a share. It actually hit $10 right at the start of the trading week and even went as high as $16 before consolidating. It is currently consolidating at the $11 to $12 range for the past 2 days. This pullback in consolidation is completely normal, especially for a stock that has gone up so much. So if you're worried the stock price might continue to go lower, I personally would not worry as everything so far seems really normal. If SOS's PR team releases news that they have started to mine this week, then I fully expect their share price to spike up this week. Either way, I still think SOS has a lot of room to grow. I fully expect SOS to hit my price target of $25 a share. Now, back to the reason why I'm even making this video. Nowadays, a lot of people just like to blindly buy stocks without actually doing research into the stocks that they are investing in. This is definitely something I do not advise unless you like to lose money. And if you actually do like to lose money, then you're better off just donating your money to me. You should always do due diligence if you want to minimize risk and get higher returns on your investment, and I'm going to tell you why. Reason number 1. When you constantly do research on different stocks, you can occasionally find hidden gems. Have you ever had this situation happen to you? You see these stocks that have gone up like crazy and you're always wondering, why? Why can I never find these plays earlier? Well, I'll tell you why. That's because you don't do enough research on different types of stocks. When you actually do research on different types of stocks, sometimes you'll be able to find these hidden gems and actually be early for once. This actually happened to me around 2 weeks ago when I stumbled upon SOS. I was watching a YouTube video talking about the stock Mara because I want to invest into a cryptocurrency related stock. As I was going through the comments in the video, I saw someone say, I think that SOS has a lot more potential than Mara. And that's when I started to do some digging on SOS and realized I found a hidden gem. I got into this play really early as within the week, it would go from $4 to almost $16. That is equivalent to a 400% return on investment in such a short period of time. Reason number 2 why you should always do your due diligence before buying a stock is because if the stock crashes or dips, your first instinct will not be to sell. How many times have you bought a stock and then the share price starts to drop significantly and you end up panic selling only for the stock to end up recovering? This has happened to me many times in the past, but then I realized if you truly believe in a company, this will give you a peace of mind while other investors are panicking. To truly believe in a company, that starts with research. A recent example from last week was when SOS opened at $15 a share and quickly dropped to $8 a share really quickly. My friend who had listened to me and bought SOS at $6 a share was panicking really hard during the dip and almost sold his shares at $9. I managed to convince him to not sell his shares, and I even managed to pick up some cheap shares of my own at $9.50. Within 1 hour, the share price recovered back to $13. More of the story is if a stock drops in price based on no news, it shouldn't change your judgment on what you think of the stock. After doing research, I saw SOS as a $25 stock, so instead of panicking, I saw a good buying opportunity instead. Meanwhile, my friend, who just followed me blindly, was panicking during the dip and almost caused him to sell low. This brings me to my last reason. If you did your due diligence, when a stock crashes, instead of panicking, you will see good buying opportunities. How many times have you wanted to buy a stock for a cheaper price, but then when it actually drops to the price that you had in mind, you were scared it was not done dropping yet, so then you hesitated to buy. And then you kick yourself for not buying the dip when the price recovers. I think that happens to everyone because psychologically when the stock is dropping, we always think of the worst case scenario of the stock continuing to fall more. If you did do your due diligence on the stock, and if it drops, it would actually seem like a good buying opportunity instead. Recently, there was a short report published by Wolfpack Research that accused eHang of committing fraud, which dropped their share price from $130 to $40 within 1 hour. Since there is a stigma against Chinese companies with committing fraud thanks to Luckin Coffee, that caused a lot of panic among the investors and caused a massive sell-off. Because I was already really interested in investing in EHang but didn't because of how high the price have gone up, I saw this as a great buying opportunity. I had previously already done a lot of research about the company, so the first thing I did when the report came out was read what Wolfpack Research was accusing EHang of. Immediately after scanning through some of their arguments on the report, I already saw some things did not add up, leading me to doubt the legitimacy of the report. Then I also read up on previous short reports published by Wolfpack Research and saw that majority of the companies they shorted actually ended up having a higher share price after the fact. That led me to believe the report they published was not legitimate. Thanks to the report, I finally had this opportunity to buy EHang at a much lower price. Most people were scared to touch the stock, but for me, it was a blessing. When the stock was falling, my first buy-in was at $88. Then it kept dropping. I averaged down and bought in at $75. And then it continued to drop and I bought more when it finally reached the bottom at $40. The next day, the stock went from $40 in the morning to a high of $81 at market close. I managed to sell at $79 for a nice quick profit just because I saw an opportunity to buy while others were scared. Research can be the difference between losing money and earning money when buying stocks. I'm sure you guys do research when making big purchases such as buying a new car or buying a new smartphone, so why should it be any more different when buying stocks? If you guys learned something new in this video, I hope you guys can help me out by subscribing to my channel and giving my video a like. Also, if there are any other stocks that you think that I should cover, feel free to comment in the comment section below. Anyways, I hope you guys all have a great day and I'll see you guys next time.